Hello and welcome to another MCO market update on SUI. The SUI chart is still holding above this previous swing low, above our red line, this structural support line here above the 13th of March, swing low at 212. So we're holding above that swing low of $2.12, but it's testing that level, and overall situation is pretty much unchanged. We have seen only consolidation pretty much since the 11th or 12th of March. There has been a bit of a rally, but well, that's a three-wave move up only, okay? And therefore, with only three waves up, we don't have any confirmation that a substantial low has formed. I think next week could be an important one, given that also the stock market sold off quite strongly. SUI held. We are at a very, very important pivot. Yeah, we are holding above the $1.99 level. Which level is that? Well, that's the 50% retracement level on our larger time frame, and we talk about that every few days. I think when I cover the SUI chart regularly, and on the larger time frame, this is the last key support level. And then I always tell you that on the smaller time frame, there are a couple of more levels that we can track. One more low would still be acceptable even in a bullish scenario, but any more downside means likely that the market has formed a major top. So $1.86 and $1.96 would be the next levels below $1.99. So one more low would still be acceptable, but it would still be very, very deep for a still unfolding fourth wave. So at the moment, I think further downside remains likely, especially as long as the market stays below $2.53. Any break above that level would be an early indication that low is in, but then it would at least shift the focus to that target zone above. Let's see if we need to adjust it slightly, maybe just slightly, yeah. And that is between $3.05 and $3.50 with an additional level at $3.32. All it means is, of course, the market could go higher, but we need to break above at least a key level to indicate the bulls are serious and the bulls are trying to regain control. Yeah, and that level is the last swing high there at 253, and the $3.05 level would be an ideal target for a C wave. The move to the upside, because it was only three waves, I consider it wave A of wave 1, considering that this could be a wave 1 of an ending diagonal pattern. So just in case you're wondering why we're dealing with ABC structures in a wave 1. But yeah, I mean, the micro patterns are pretty difficult to read at the moment. I still find it quite likely that this lower support area will be tested. At the same time, it's not great because it would mean a break below the 199 level. But if it's not a sustained break, that is acceptable. There are difficult times in the market at the moment, I would say, so maybe here and there we get some wave distortions. Important is to mention that the $1.99 level, that important support level, is not an invalidation point for anything. So we could still call it a fourth wave, even with a break below that level. But it's about time the bulls turn up. But for now, there is no sign that they're actually doing that. We next week we have to pay attention. I don't think we'll get too much action on the weekend, but next week we'll have to pay close attention to that $2.53 level above. And if it breaks, the focus shifts towards $3.05. So overall, not much change at the moment. I assume further downside until we really get a reversal signal, which is not there yet. So hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.